Good,
I
good. Sorry for keeping you waiting. My network has been giving me problems on my side.
no problem, no problem.
All right, so without wasting much time, I think you sent me something on EU with something like this. On EJ, sorry, not EU, on EJ.
Yes,
So normally for me, I don't really use trend lines. I use them, but not always. Maybe I use them like 1% of the times, like having these channels on my charts. I rarely use them like on currencies, unless maybe I'm trading synthetics, but on my side, I don't really use them. So in terms of bias, I don't know, did you take any trades between yesterday and today?
I took today on that EJ because I just used I use it as both as I use that both as support
Resistance.
and the resistance level.
Okay.
But the trade is still ongoing. Yesterday
Okay.
I didn't take it. So this yesterday
All right. Were you in a buy or in a sell?
I was in a sale
Okay, in a
because
sell.
I looked at the daily. Daily was sale.
All right. All right. So yesterday, well, the past like 2 days, we did get a confirmation that we were on the bearish side after we got this. So sell setups on any of those days, including the today, would have been perfect. But maybe let's just do a quick recap here. So for the day before yesterday, what I just want to highlight is this liquidity sweep here. So soon as you figure out that you are in a sell motion, so we figured it out after Monday had closed, which means coming into Tuesday, Wednesday, and probably today, we are still looking for sell entries or for sell trades. So starting off with Tuesday, most likely we could have looked for a sell here, aiming for these lows here. This would have been a perfect sell. I'm not sure on the risk to reward if it would have been worth it, but that would have been a perfect sell. Now, the other thing I want to add right on this liquidity sweep is soon as you figure out that you've got a sell motion, don't forget this pattern here. If price is in a downtrend, most of the times it will come and take out the last high. It can be the previous day's high, or it can be the last high visible either on M15, M30, or H1. If you're able to visibly see this stop hunt happen, you shouldn't hesitate to take a trade. So New York session offered that liquidity sweep with a nice nameable candle. If you were waiting for safer sells, maybe you would have waited for price to drop a bit, but I'm sure on the smaller time frames, you could have found an early entry in there. And again, you would have been targeting either this low, the moving average, or this low of the day. So on this particular example, price would have most likely either retrace to take you out and break even, or depending with where your stop loss was, it would have played out to TP. And that takes us into yesterday. Then yesterday again, we were looking for sells. So if you manage to catch anything here around the open price, that's London session, coming down to these lows here, that's still perfect. Then if you're trading New York session, point of interest would simply have been the London high and this order block to our left, which has been respected, or rather was respected at New York yesterday and today at Asia. So again, if you found any reason to sell, for me, maybe there might have been not been anything here because I don't have the candles I want to see. But maybe Asian session would have given something. But again, if you entered at London session today, what would your setup be looking like? So just to push back here, I just want to mark the opening candle, which is this one. So if I'm using the ORB to confirm my trade, this is the break. I want to see the break and the close below. If I'm waiting for a safe entry, this is what I want to see. So I probably would have taken this for a sell, but if I was in this trade, then it would have taken me out. If I was taking this trade, it would have taken me out. I'm not sure where is your sell entry on this particular trade on EJ.
Um, okay. It should be. Please let me see where the London session starts. Okay. That dotted line, that's your line, straight line.
Right here.
Yes. But I know it must have taken me out by now if I check my stuff.
Okay. All right. So if you entered here, then your stop loss was supposed to be right here. So remember
Yes.
what we're trying to use for stop loss is the last nameable candle you see.
Number candle.
Yeah,
Yeah.
especially a pin bar or a doji. So any candle with a wick, that's the one you want to use for your SL. So in this example, you could have used this one, or you could have used this doji here, which means the stop loss would be slightly above the open price. But again, it all depends with how you're seeing it. But at the same time, if we are to come back to the daily and zoom in, what you will notice is that as much as we are anticipating a sell, price already dropped. This drop which happened at Asian, this drop you see here, it has already interacted with the dynamic support on the daily, which is the 50 EMA. Or it almost interacted. You see right here. That's the first thing. The second thing you see is you see this level which is marked here, this low here. Liquidity has been taken out there. So we've got sell side liquidity taken, and we've got price rejecting near a support zone. So if I was looking at it based on those factors in place, I wouldn't really have wanted to take a sell for now. I think I would have waited to see what price actually wants to do. Because remember, after a liquidity sweep to the downside, that red line you see, okay, let me just extend it here so that it can make sense. Okay, we're going to zoom in. Right, this low here is from last week, I think. Let's just put the exact price. Okay, it's actually equal lows. All right, so if you look at this price action like this, we've interacted close to a support zone on a higher time frame, which is the daily. That's number one. Number two, we've got equal lows right here, right? So we have a sell side liquidity sweep, or equal lows, which are looking like a sell side liquidity sweep. Then if you come to H1 now, you see price has swept below yesterday's lows. So that's a sell side liquidity sweep. So all these factors are pointing to price to push up and not down. If we are selling, we want to see price respect the 50, come down below the 13 and stay below and still push down. So with this particular entry you have, I think I would have been patient with it a bit just based on what price has done here. That alone is enough to make me like be patient enough with the setup, because there's no guarantee we're going to drop because the daily has hit a dynamic support. There's also no guarantee we're going to drop because we have sell side liquidity taken on the H1, and we've got equal lows, this low testing on a level from last week. So with that in mind, the only time you want to sell is probably after this last order block is broken. So if price comes back below the previous day's low, that's where you can safely look for sells. Otherwise, based on what price is done, I don't think the sell will play out. It will most likely take you out if it hasn't taken you out already.
Yeah, what I went for was for a very short sales.
Mhm. And
Uh,
what was your
so
target?
that line I drew, that my something like
Oh, okay.
that bridge.
So yeah, so again, let me just also emphasize, sorry to cut you off. Let's say you are selling. Remember, if we are in a downtrend and we are selling and we see a reaction here and we want to sell. Remember, for all these pullbacks, there is an order block placed somewhere in there. There is an order block. So for the sell to be valid, you want to see price break, sort of retest and continue pushing down. So in this example, the order block we had is right here. Right. So if we are taking this as price or as a continuation to come down, we want to see that order block getting broken. Meaning, if you took a sell here, your target was supposed to be the order block to scale out. Scale out on the order block. Then if price breaks, then you know, okay, the sell is actually solid. Then whatever position you leave will eventually play out. I think that's the way you were actually supposed to look at this particular trade. Then as long as we are also between the 50 and the 13, if you look at the past 2 days, yes, they are nameable candles. Yes, there's chances we can push down, but the fact that this dynamic support is still stopping us for now makes the setup low probability. That setup you had, it was also a low probability. All right, so I don't know based
Yes,
on
I'm thinking because if you look at price action,
Mhm.
most of the on the dailies, most of the time the candlesticks is always between the either the 30 and either the 50 and the 30 50 and the 13 EMA versus 200 EMA or 800 EMA. The price is always at the center, which makes it to have a low probability setting.
Yeah,
Hello.
true, especially for this asset. Well, I think what we need to emphasize there is the distance between the moving averages. So if we've got
Yes.
like a tight squeeze like the one you see now, you see the 50 and the 13, should price come inside here, any setup in there is low probability. Why? Because it's more or less like we've got a resistance on top and we've got a support on the bottom, and price is caught inside that tight gap. Then there is now a
Exactly.
difference when you've got your 13 EMA here and your 50 is here, whereby you've got a bit of a distance between that dynamic support and resistance in such a way that you can still sell and buy within that range. So I think what you just need to maybe pay attention to is just the close proximity of these EMAs. If they are too close like this, it means there is not enough room, or rather, there's no volume in the markets for you to make a good trade or a high probability trade. Same applies to this part here. Each time you see these moving averages like this, they too close and price is inside here. As long as price comes inside like this, there's nothing. When price comes inside like this, there's nothing until price comes outside. Then it's a bit different now when price is in between this 13 and this 200, because now there is a room for this price to sort of breathe. So that's also what you just need to pay attention to in terms of like volume.
Which time frame is the best for determining that volume, the volatility
The
in the
daily
market?
chart is best.
Okay, the literature,
Yeah,
okay.
because we are day traders, the daily chart sort of gives us a hint. Remember the other lesson we had the other day when we were saying we are trying to trade on days like these. See, these days with bigger candles, these days like these are the days we're trying to trade because there is volume within one day. There is big moves. Price might have been trending the whole day. Those are the things we're looking for. Unlike days like these and days like these, right? Days like these, the volume is a bit tight, which means there's not much room for the trade to breathe, whether you want to buy or you want to sell. Whatever direction you're picking, there is not much volume in the market in such a way that if you enter a trade, it will go to your take profit. Sometimes you enter and it will go to 1:1, then it will retrace to your entry. I think we explained it on the other day as well. So,
Yes, we did.
yeah, unlike if, let's say, if this daily candle was like this, right? This is showing volume, right? If this daily candle also was like this is also showing volume. So that would have given maybe a higher chance that price wants to break and continue pushing down in such a way that we continue looking for sales until maybe price gets to these lows to our left-hand side. So looking at the previous days, okay, as much as you've got your bias, let's say price is trading below the 13 and we're saying we're selling. do we have enough volume for us to hold a trade to 1:2 or 1:3? Or is it just a scalp trade where you're just going in and out? So the better days to trade are the days whereby you've got volume. So as long as you're getting big candles like this, it's easier to come on day number 3 and get a trade. Even on day number 4 here, if we were looking for a sell here, we most likely could have found a sell coming down to the 50 EMA, which is a dynamic support. Then from there, we might have looked for a reversal. And again, we still expect volume because the past few days were all high volume days. So just try to pay attention to that. And the daily chart has to be your best friend for your buyers and to check volume. I think there's an indicator which shows volume, although I don't use that indicator. I don't even know how to install it on MT5. But I think you should maybe research on an indicator called is it ATR? I know this stands for the range, but yeah, I've heard some traders speak on this indicator whereby it shows you whether the market is good volume or not. But for me, I don't use it. I simply need to just look at the candles for me to understand if there is volume.
Yeah, method is okay.
Yeah.
No waste.
So in terms of trading today, I would say today has got possibilities of pushing up. Today has got possibilities of going sideways. So most likely it could be better to allow the price action to play along for the whole day to see if we're going to maybe break or stay in this zone. So maybe the best trades might be tomorrow, Friday, depending with how we close. But if you notice, even here, if you look at Tuesday's price action and yesterday's price action, there is no volume here. Volume is something like this, whereby price is moving in one direction, either in one big motion or in a trend. Those are big volume days. These days, like yesterday and the day before, no volume. So if you've got no volume, there's also chances that today we might have no volume as well. All right. So I don't know if you've got any questions on EJ.
No, no, no
Okay.
question.
All right. So that's it for EJ. 1, 2, 3, 4 days this week. The only day with volume was Monday. The current 3 days haven't had much of volume. We'll see how tomorrow plays out. And if you also notice, price is still trading within this range which we marked. So we're going to see maybe they'll start coming up. But for us to come up, we still need one candle to at least close above the 13 EMA to give us the bullish bias. So I noticed EU today. I did not come on the charts at London, and I just noticed when I was coming on now that these assets actually gave some nice setups. I'm not sure if you took any trades on EU.
Euro, is it Euro USD?
Yes.
No, no, you didn't.
Okay, so Euro USD, if you look at the current market structure which we have, okay, what is market structure? Market structure is simply these swings. These swings we're seeing here, these swings, all these swings, that's our market structure. So what is market structure showing us? On EU, if you look at it, we are trading within Friday's range. I think we mentioned it before. We've got this low and this high from Friday last week. Price trickled all the way to this low yesterday. This is where the buy setup started. I'm not sure if I shared this in the group, but maybe I shared an after of the trade which I saw and took. And before yesterday, we had marked this candle here. On our last lesson, we marked this candle. So we marked this high, we marked this low, and I think by the time we had our session price was coming up, and I'm sure we highlighted that we wanted to see whether price is going to come out or what. So if you look at this range, we're going to call this a range. When price hit this low, they now pushed back up to the other side. This happens maybe 70 to 80% of the times. Let me just say 60 to 80% of the times. If you identify a range and price takes out liquidity on the other side, there is 60 to 80% chances price is going to run to the other side whereby the other liquidity is lying. All right. This happens on all time frames. It can be on M15, it can be on 8, whatever time frame your eyes see that market structure on. Just mark those levels and allow it to help you to come up with a setup. So if you notice here, we hit this low, we push to the high. Now, on the higher time frame structure, we've also hit this low. So what are the chances that we're going to now push up to the other side, which is this side? We've got 60 to 80% chance that price is coming there. Now that we know that we are anticipating price to push up, what do we look for? So yesterday, I saw and identified a liquidity sweep during the London session. Then when I came to New York, that's where my setup sort of manifested, and I'll show it to you just now. That was the first buy. The second buy is if I'm in an uptrend, what do I want to see? I want to see price create higher highs, higher lows, higher highs, higher lows, higher highs, maybe a liquidity sweep and continue to create a higher high, higher low, maybe a retest of a broken zone, support and resistance. Those are the things I'm looking for. I'm also looking to identify these levels which are equal lows in case there is a liquidity sweep. I want to identify any fair value gap if there is anything, this broken zone, any order block. So I'm now looking for reasons to buy only just because of the market structure I'm looking at. So, which means coming into today, I was looking for all the things I've just mentioned to you. Anything which is going to line up with a buy, I'm going to use it to take my trade. So, what did the London session give us? London session, when we came to the charts, you would have seen that, okay, price yesterday has hit a zone. We're now starting to push up. We broke an order block here. We pushed up. This area here is a point of interest, right? That high there from Tuesday, it's a point of interest. The high from yesterday is a point of interest. Why are we marking these levels? Because if price pushes up and breaks and retests, we've already planned that we are only looking for reasons to buy, which means we're going to buy a zone flip setup. If price does the same here, we're going to buy another zone flip setup. You see, that's the reason we are marking all these points. What else did price show us? We had the open price, which was in line with yesterday's highs. We had the 50 and the 200s, which are lying as a dynamic support zone. We had the 13 EMA, and we also had nameable candles right at the open of the London session. So now, where exactly do you put your entry? Maybe that's the next question. Because if you notice, the next nameable candle actually came slightly lower and took out these lows. So again, remember I mentioned as long as you've got a bias, trading becomes a little bit easy because you're only looking for reasons to buy. So if you zoom in on M15, you look to your left, you've got this initial low, right here, you've got the 200 EMA right there. You've got these lows from the PM session yesterday. You see that low here, that red line I put. So you are watching price and you've marked the opening range candle, the M15 candle, you've marked the previous day's high. All this you're doing so that you can get a high probability trade, right? You've marked all your points of interest. Now you wait. You are waiting 15, 15, 15, 15. That's 1 hour of waiting. You might have considered a buy here, but personally for me, especially these days, I'd love to get that break of the opening range so that I can engage in that trade or in that setup. If I can get that break, that confirms that my setup is correct, and I just look for another reason to enter and I enter, right? So that's the first thing. So here you could have still been watching while it's waiting for price to break here for you to buy. So there was no break, which means you're still sitting on your hands. There's no trade. Price has also rejected the 800 EMA from here and here. But we are not selling here. Why are we not selling? Because we've got a directional bias to buy based on a higher time frame market structure. Right? So price continued to push down. We respected now the 200, respected or took out liquidity on the PM session from yesterday. Price came back above the 13. Now we've got something to work with. We've got a pattern, two equal lows and a liquidity sweep. That's the first thing. Two equal lows, liquidity sweep. Everything is happening on a point of interest. That's also something you want to take note of. So now, if you want to buy, what's your reason to buy? Remember, you are inside the Q zone time, so whatever you see is valid. There is no reason to wait for anything else. Whatever you see in your Q zone time is valid. Either the trade will play out or it will hit your stop loss. First things first, now we've got an order block right here. Right, soon as we break this order block, that will be the sign to buy, number one. Number two, if we break the open price and the previous day's low, that's another reason to buy. Number three, any other nameable candle which might appear here is also a reason for you to buy. All these things appeared, and this happened just before the Q zone happened, which means your entry would have been anywhere in here. So if your entry is in there, maybe you're asking, where should you put your stop loss? All right, if you zoom in here, what nameable candle do you see if you had entered either here, 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 or here? What nameable candle do you see? For me, I can clearly see this candle
Yes.
here. Yeah. So I'm using that candle now as my stop loss, right? I'm saying this price now has done whatever damage it needed to done, especially after seeing the liquidity sweep or the stop hunt. A break of an order block means now my setup is in motion. Should this price retrace, it can retrace and retest into that nameable candle, which is in line with this order block, right? So if it retests, that's still fine. Room for error, my stop loss is below that nameable candle, which is right here, which is almost below this order block as well. So depending with where the entry is, probably this trade would have been on 1s to 2 right now. So this is how you could have approached Euro USD just by understanding market structure, understanding that if you're in a range which you have identified, price will most likely move to the other side. Same as this range which we drew. You see, we drew this high and this low. If this price continues to come up and we tap this high here, maybe we do a liquidity sweep and we come back below that range, we're going to have a 60 to 80% chance that the month of September price will most likely trickle down to these lows. This is tried and tested based on screen time, based on back testing, and based on just looking at price. This simple pattern can be applied on any time frame where you can visibly see it. If you see it on the daily, take it there. If you see it based on just one candle, if you see this candle is an odd one out, this candle here, it's an odd one out. Why? Because it took out all these highs from the left. This one took out all these lows except this one. So for me, that candle was standing out, so I had to mark the high and the low. If you're looking at that same candle from H1 or maybe H4, you can still see that that's the same range from Friday's high and Friday's low. So depending with what time frame it's making sense to you, just mark it on that time frame, then wait. Then if you're using or if you were using SMT divergence, something which I introduced recently, right? SMT divergence, what I want you to, or what I want to highlight is you notice this low from Friday and this low from yesterday. We've got lower lows here or a lower low. Now, if you come to GBP USD, it's supposed to show you something like this, a higher high for there to be SMT divergence. So GU H1, if you take a look at it, same thing. This low from Friday and this low from yesterday. Now we've got price creating a what? A higher low. and EU on the other side is like this. So that alone is a divergence setup. After you figure out that you've got a divergence setup, you are now looking for reasons to justify why the divergence is going to work. So if we already had a bias like you saw, now we've identified SMT divergence. If you wanted to trade GU, still here's your liquidity sweep, which happened here. You could have looked for a reason to buy in your New York session, as you see, up until an order block was broken. Any H1 candle giving you a wick is a sign or a signal for a sell, for a buy, sorry, since we are in a buy motion. And again, even today, we still had this SMT divergence, whereby price created this lower low here based on yesterday's low. But if we come to EU, I think EU had an equal low, if I'm not mistaken, or a higher low, as you see here. That same level, if you look at it like this, you see we've got a bit of a higher low. Again, that's a divergence or SMT divergence. So as long as you're able or you are conscious on these things, they are just signs showing you that that bias you have, which is bullish, it's being supported by multiple different confluences. A person using only SMT can take the trade. A person only waiting for liquidity sweeps can take the trade. You see, so it's all about what like pops up in your mind when you're looking at the chart. So this was EU and GU, and I'm still bullish on EU until we get up here. So what does it mean for the afternoon? It simply means if price retraces into the 13, and if it happens around New York session, what am I going to do? I'm going to take a buy. Why am I going to take a buy? Because I already have a buying bias in place. Worst case scenario would be price pushing like this, then coming down to take out this low, bouncing again on the 800, and then pushing up. So in my mind, I'm already open to seeing such moves happen, right? I'm already open to seeing such moves happen. So if I see price not respecting this level or the 13, in my mind, I already know, okay, they are coming for the liquidity sweep. I wait for that. If they do a liquidity sweep, then I know whatever I planned is in motion and I take a buy. But if they start doing something else which I did not plan for, then I'm going to sit on my hands and maybe wait for tomorrow. That's the only thing you need to do when you're approaching the chart. Understand what's going on, understand the market structure, understand the higher time frame. If everything is clear, then there's nothing else to wait for. So I think that's all for today. There's about 6 minutes in this session. Um, Okay, I just noticed you were coming back in the session. I'm not sure what time you exited, but I spoke of multiple things, SMT divergence and all that.
Okay, no problem. I'll go through.
Okay, all right. So that's my trade idea. I spoke trade idea for EU, GU. Then German 40, the last one as we finish. I also missed this trade, right? I missed this trade here. I think there's nothing much to explain here. If you look at this trade, it's self-explanatory. We already have a sell bias. All right, we already have a sell bias. Right, do you see the difference on the candles? This candle from yesterday is showing volume, unlike the candles which we have on EJ, which are tiny. So because yesterday's candle is showing volume and we close below the 50 and we are already below the 13, when we came into today, we still had that selling bias. Crystal clear. Where are we trading to? We are trading towards 24,000. We are trading towards this low here, which you see. Those are the targets, right? You come to H4 in case you want to use H4 for anything. If you look at H4, price has to be on or near the 13. All these areas for me are the areas where I'm looking for sales, right? So London session opened while this price was right on the 13 EMA. So it was just a matter of patience and allowing price to do what it does. What did H1 give us? H1 gave us a nice nameable candle, number one. I'm not sure what we were respecting here, but the London high for yesterday, you can see that's where price came to, which also emphasizes or puts emphasis on marking the previous day's session highs and lows. So we have a nameable candle bouncing off the London high, and we have a selling bias on the higher time frame. So you could also have waited for H1 to close below the 13. That's still perfect. There's nothing wrong with that. You could have waited for this order block to be broken. That's still perfect if you see price still continued to push down. So now coming to M15. M15, I'm only interested in the opening range candle, number one. Number two, I'm interested in just seeing what happened. We had the 200 EMA, which is a dynamic support and resistance. We had no reason to buy here. We have no reason to buy. Why? Because that daily time frame is in a bearish motion or on the sell side. So ignore this. This thing you see here is just the dealer inducing people to buy when they know that price wants to drop. So again, I would have marked my opening range candle, waited for my close. Then from there, I could have executed a trade, aiming to scale out at this low, aiming to scale out at this order block, aiming to scale out at the open price at 24,000 and at that red line, which you see below. But I missed all these trades today because I was literally not on charts. When I woke up, I simply told myself I'm not trading London. So I was just doing some errands. Hence, I missed this trade. But otherwise, this is how you could have traded it, right? If you look at it here, you could have entered here, stop loss above the last nameable candle. 1:2 would have been somewhere there. So this price would almost be on 1:2. But for me, I would have probably started maybe scaling out here, or scaling out anyway in here. That's how the setup was looking like. Yesterday we had nothing. You can see I wanted to sell, did not happen. I wanted to buy, did not happen. So yeah, so I think that's all for today's lesson. Just a recap, and I spoke of all of the things, most of the things, if not all of them, which we use when we are looking for trades. So going into the afternoon, if I get a zone flip here, I will consider a sell. If I get a zone flip, a break in the retest of yesterday's low, I'll still consider sells on German foot. So that's all from me today. If you've got any questions, now would be the time.
No question.
Okay. So when you get time, you can just go through this video again because I believe it's carrying a lot of nuggets, a lot of information which you can use. And if you've got any questions, we will tackle them maybe on the weekend because I believe we've got a session on the weekend where we're going to do a recap of the whole month.
Yes, yes, yes,
Yeah,
you are.
so we'll still finalize on the time, but apart from that, I think that's all from me today. I'll send this session to you on Telegram as well.
Okay, sir.
Okay, all right, awesome. Thank you so much for your time today. Enjoy the rest of your day. Good trading.
All right.
All right, bye.